Peace, power, and prosperity, family. This is Amir, the Chicago crypto hustler, Bitcoin block bully, coming to you once again with another crypto tutorial. In this one, I will be going over once again the options trading that is available on the DragonEx Exchange Market, only via the Android app, though, as of right now. If anyone's seen my previous video on the DragonEx updates, you'll see that I stated and showed you that the actual iOS and the web version of the options trading will be implemented at a future date. So right now what we're using for our demonstration is a Samsung tablet, which is an Android. So you can actually download the options app on any Android device, and it will allow you to trade in Bitcoin, Ethereum, and Dragon token. Now, as you can see up in the right hand side, you see the deposit box. You would open the deposit and transfer funds from the trade account over to the options account in whichever currency you wish to trade in. For those that are new to trading options, they actually give you an amount of practice coins to trade with. As you can see, I've been trading already with mine. Right now, I have a total of 10,504.57 of the practice coins. Over on the upper left-hand side, you can see that you have two different currencies that you can trade options with, being Bitcoin versus USD and Ethereum versus USD. Now, in options trading, it's not the same as normal trading, whereas you buy in at a certain price and then you sell it at a certain price, or you short it at a certain price and then buy back in at a certain price. Basically, what you are given is options to bet a contract, either a call or a put. A call being bullish, meaning that you're betting on the price action to go up. A put being bearish, meaning you're betting on the price action to go down. And the contracts have certain denominations of currency in which you trade in. So over on the right under deposits, you can see where it says investment. If we open that, you can see we can trade for each coin right now, one contract a coin. Now you can also make this a half a token, a half of a token, and so on. Or you can trade in large amounts. So as of right now, each contract will be worth $10,000 if we were to trade with our buy investment being this high. So we're going to go back down to one coin for one contract. And as I was saying, you have two different options to trade. You have calls and you have puts. A call option gives the holder the right to buy a stock, but not the obligation to hold. A put option gives the holder the right to sell the stock, but you're not obligated to hold it. If I said that correctly. No, it grants you the right, but not the obligation to buy or sell the coin or the asset at a set price on or before a certain date. Let me get that right. So those are what the contracts entail when you're looking at calls and you're looking at puts. I'm going to get into a demonstration of each one right here in a second. If we look over here on the left-hand side, under the underlying asset, let's go back over to Bitcoin. We can see that, number one, you can look at your trading history. As you see, I left out of trading 50 coins per contract. Went down to 1. And you can see your losses and your gains. And then if you pay attention to the arrow by the actual asset, whereas at the top we see ETH versus USD, and the arrow is going up, that means that was a call. If you see ETH versus USD and the arrow going down in the red, that was a put. Now, following that, the next number that you see in green or red tells you if you won or lost that contract. Now, under that, what it shows you is the 3 exchange markets that it's using for its spot index, which is a mean of an average of the other prices. So we're looking at Binance right now at 57.79, Huobi at 57.78, and then OKEX at 57.79. And once again, it's the mean of the individual asset price relatives of the ratios of the current prices to the base period price. So we got the index of USDT of 57.79, and then the base price of 99 cents to the dollar of USD to USDT. So it gives you the spot index of 57.60. So we're not trading exactly on mark of the price of any specific exchange market. Always remember that also. Though you can use the fluctuation of said exchange markets if you're using a line graph to better trade your options with, in my opinion, and to my experience also. So we're going to close this up. We're going to move right along. Down at the bottom, you see you have different time frames. Right now we're on the 2-minute. You can switch it to 5-minute, 15-minute, and 30-minute. Now you also have the option to trade ATM or OTM. ATM is at the money, OTM is out the money. Basically, let me see if I can find a perfect definition for you. Okay, so when the strike price and the market price of the underlying security are equal, the option is called at the money. Options can also be out of the money, meaning the strike price is not favorable in the market price. An OTM call option would have a higher strike price with the market price of the stock. Conversely, an OTM put option would have a lower strike price than the market price. An OTM option means the option has yet to make money because the strike price hasn't moved enough to make the option profitable. As a result, OTM options usually have lower premiums than ITM options, which is in the money. So right now we're trading at ATM. And what we're going to do is put in, now that we're at the low, we're going to put in a couple of calls. So we place 3 call options down at the bottom. Now, if we spike higher and we go at levels above 57.62, maybe 57.63, I may also, which this platform allows you to do, place some put options, betting on the price to retrace and thus go lower than the actual price, locking in profits on both sides. So as of right now, what you're seeing is the price action going above where we placed our calls at. Right now, I believe we have 3 actual calls put in, and you can see we just received 2.97 of the token in profit. Now we can set our puts. So we got 2, 3, 4. We place those at the top. Now you want to know a little something about price action, price fluctuation. Definitely how to read charts, align candlesticks before you just start options trading. Though I do like that they give you the advantage of utilizing practice account. So as you can see, I placed my, let me place some. Oh, I missed it. Okay, so what happens is I placed the order after the time ran out. So that'd be a premature order, though it will still come through on the next as a contract. So now what we're hoping for is for price action to stay below where we placed our puts at. And it seems like we're running out of time, and it is going above. So we did lose those. Now, you do see how low we were leading up to the time that was allowed and how fast price action came back and liquidated our position. So what you want to pay attention to, number one, is at what time you place your option at, whether it's a put or a call. At the top, you can see that they have the countdown. Right now, we see 12 seconds, 10 seconds, and counting down in the white box. At the bottom, you have a flag, which lets you know that when it reaches that point, all trading for that specific contract is over with. Right now, any trading that is done would go on the next contract. the preceding. And I believe, what is that, about 18 seconds, roughly 20 seconds. So when you first start a contract, right now we got 3, 2, 1, 40 seconds. As you can see, each contract is 40 seconds from start of trading, which we must have had an order put in. Oh yeah, we did have the call order put in. So we did gain 0.98. Let's turn on OTM market. Now what we're going to do is hopefully place a put option in if we can catch the top, or what we may deem to be the top. Let's put one in. Place another one in. So now if we retrace at any time, oh wait, we don't even have time. So we got 15, 14 seconds left in this. Right now we are below our put option price, contract price that is, hoping that we can finish out below. And yes, we do. We have it. So as you can see, my price increasing to the upside, and we gained 1.86 coins with that transaction. Now we can also up our investment, right? Let's play with $44 or 44 coins, excuse me. So now each investment is worth 44 tokens. And what we're going to do is try to catch the bottom here. Which I believe we may have accomplished. Let's see exactly how it works out for us. Now, anything made right now, like I said, will be premature and goes on to the next contract. So we're waiting to see if price action is going to exceed. And it did not. So we lost those. We lost 132 coins with that one transaction. And what you will do is try again. And like I said, this is just for demonstration purposes, family. You do want to have some type of foreknowledge of price and market fluctuation and volatility. Now, if we go back and we take a look at the actual markets, we can see where Binance, where Hubby, and where OKEX is. Price action is going up. Hopefully we can keep. We got 10 seconds left. We've got about 10 seconds left to keep price action where it is above our call options. And it looks like we may, and yes, we've won. So you can see we won back 131.67 tokens with that transaction. And that is basically options trading on the DragonEx Exchange Market in a nutshell, family. I hope that this video was helpful. I hope that the sound quality of this one is so much greater than the last one I previously did also. I'll be checking it out before I download it, or upload it rather. Until the next video, this is Amir the Chicago Crypto Hustler, Bitcoin Block Bully. Peace, power, and prosperity, family. I am out of here.